If you ever want to know something, you would generally ask somebody with knowledge and experience. If you need a procedure done, you would want someone skilled and experienced to do the work. But in today's financial markets, you don't have that. You have computer algorithms and so-called, quote, professionals and, quote, financial experts who have been in the game such a short period of time, they don't even know what a crash looks like. You came here for the truth, so let me unveil that for you. I want to begin with this. Untested majority. More than half of fund managers have 9 years of experience or less. Now think about that for a second. The people that are managing your money, that are managing the funds out there, have literally never seen a crash. The markets have been growing consistently since March of 2009, and that's when half of these fund managers have been in the field. So they have only seen low interest rates and rising markets. So clearly they have a bias. They don't think that the markets can go downwards simply because they've never experienced it before. They came out of college, perhaps in a different career, who knows? And then on top of that, you have all these computer algorithms that are doing the trades anyway. Now think about this in the real estate industry. Same thing applies. And you look at markets like Canada, where you have regions, whether we're looking at Toronto area or Vancouver area, where the market has been rising since the early 90s. So you have people all over the industry, whether it's in, the lending side, the brokers and everyone else, the banks, or you look at it as the, those in the real estate industry. They are unaware, a vast majority of them, unaware that the market in real estate can go downward. So they have this extreme bias to say, of course the market's not going to go down. I've been in this for 20 years and it's only been going up. Therefore, it will continue to go up. Even Warren the Insider Buffett talks about the fact that the stupidest reason to buy something is because it's going up. What keeps you up at night? Rising inflation and a Fed policy mistake top the list of investors' biggest concerns. Look at this, 36% inflation and bond crash. The Fed ECB policy, quote, mistake. Now, the 19% you're seeing at the bottom here, this mistake they're referring to is simply increasing interest rates. That's what they're talking about. And it is a very, very big concern of the markets globally that the central banks will change their policy of easy money. They want that to continue forever. They want it to continue forever, and that is an absolute fact. Gut-wrenching sell-offs. There have been many stock slides this decade, but none quite like 2008. And you'll see that for yourself here. What we just experienced over the past few days, it's nothing but a blip along the way. Perhaps the market can go down further from this point, but we've seen dips that have taken place here over these years since March 2009, and it wouldn't be the first time, right? So we can see that this happens to be the global stock market, but you look at different markets around the world, it doesn't matter. All I'm trying to suggest to everyone is that as long as the central banks are willing to be there to push the market up faster, like they did on Friday at time for close, they basically have the ability to manipulate the markets. Now, eventually they want to pull the rug from under all of us, and they will do so when? I'm not too sure, but for the time being, they will definitely be there to support the markets. They want to let people feel a little bit afraid because they want them to make sure that they're hanging on to the central bank's every last word. Now, switching gears a little bit, at the very bottom here, you will see none other than Goldman Sachs. Now, Goldman Sachs, like all financial firms, they go out and make predictions, right? They use these models, technical analysis, and they try to predict where things will end up. They have these very, very exact numbers, and I generally do not ever want to look at that. But in this case, I wanted to show you why you can never really pick specific figures This happens to be about Brent crude, suggesting $82 a barrel. That was their 6-month forecast. Immediately after predicting that, you saw crude drop. So it's not a good idea to try and take time and price and try to make a prediction out of it. I simply just don't agree with it. We don't know what's going to happen. This right here, you saw the same instance. So right here, most bullish in a decade on crude oil, saying it's going to be going up to the moon, right? Well, they also made that same prediction here, saying that Goldman would predict this $200 super spike, and lo and behold, the crude oil market came crashing down in the financial crisis, like everything else. Credit card debt versus the real DPI. Real Investment Advice always gives some really great charts, and I want to just commend them for that. But credit card debt has been rising. I mean, you talk to people all the time, and they buy things. They buy even what they would call assets. They buy them with their credit cards. Never do that. Never buy with your credit cards, especially the fact that if you're going to carry a balance into the next month, you're going to be in a world of hurt. This is very silly to do that. I mean, look at where credit card debt has gone over the past few years. You know, any type of consumer loans, especially when they're affected by variable rates, it's so dangerous because you don't know what tomorrow is going to bring. And I assure you, it's not a good thing. Since 2009, things have really spiked upward. You can see that for yourself. But ever since then, people have not been able to deleverage. There may have been some, but I would suggest overall that really has not happened. Real savings as a percentage of disposable income definitely declining over the years. When you see that, I mean, you're looking between the 70s and 80s here when interest rates were much higher. Ever since that point, why would people save? Why would they save when they're going to get nothing in return? It just doesn't make sense, right? So they invest in more risky assets. The fund managers out there looking for really high rates of risk with derivative products and everything else. Very big mistake, obviously. And the federal annual budget deficit is to exceed $1 trillion by 2019. Definitely, you'll see that happening over time. It's only going to get worse. The deficits need to increase. It's all part of the plan. That's the way this all happens. And last but not least, to switch gears yet again, best city to live in every state. Now, there's a lot to this. I'm not going to agree with it, but I just wanted to show it to you for many of my subscribers coming from the US. If you see any of the places here, if you want to comment on it, if you want to agree with it or disagree with it, if you happen to know, on the top of the list was a place called Paradise Valley. Now, never been here. I did a quick little search, and just the look of it seems nice. But you know, these are what they say, best city or worst city, or, you know, I've brought this up before. This happens to be from a website called How Much. I like the website just because it graphically displays information and it could tell a lot in a very simple method. So I like that. But this is perhaps a little bit more opinionated, but they're basing it on here, median household income and projected job growth over the period of time. Take a look at it. Of course, grain of salt. Just thought I would bring it to you for those particularly in the US. If you live, work, or know of any of these regions, you may find it interesting. That's all for this video. If you found it informative, please give me a thumbs up. Like I always say, if you give me a thumbs up, it helps to support the channel. It's an easy thing that you can do, and I do appreciate it very much. Of course, subscribe to the channel. 85,000 plus subscribers, growing. Thanks to all of you. All right, if you want to look through the books, the first book, The Money GPS, is about the 4 asset classes and how to profit from them. My newer book, Global Economic Collapse, gets into familiar topics, but I also touch on earning income, reducing your monthly expenses, and becoming self-sufficient. So you can check those out. There are links in the description below. Take care. I just wanted to add this in. If you are interested in solutions in the how-to, I have a playlist on my channel. I'm always getting criticized and I'm always getting asked. If you want some of the information that what you can do about this, what you can make change in your life, then go to my YouTube channel, youtube.com/themoneygps. Scroll down to the very bottom. There are 2 playlists you need to check out. The Money GPS, how to and solutions. I get into so many different things on there, as well as the e-course that's at the bottom of the page. The e-course you can also find on my website, themoneygps.com. Take care.